Afternoon, everybody. Getting in the recap here for today. We had spoke yesterday in the recap, right, about the potential of trading back up into this new day opening gap. If we were to break down, we would then look for price to continue to deliver lower, right? That was one of the outcomes that we were kind of running through. So heading into New York, you see that we create relative equal lows here in London. So for now, we'll label it sell side here. And after creating these relative equal lows, we actually do give a run up into that new day opening gap. So if we go down to lower time frames, you'll see that we trade up into this new day opening gap. We actually were involved in that there. We'll speak about that as we get to lower time frames. But you'll see that we hit that new day opening gap, beautifully. I mean, look at those candle bodies. That's that precision that we'd like to see. Once we do that, we now break structure, right? Breaking underneath fair value gaps, creating inversions. And as we go on to lower time frames, you'll see the actual setups that take place in here. Right, we can go to like a 2 minute. I like the 2 minute. That's what we'd like to use here. So on the 2 minute chart, we're running a short-term high. Right, so it's the U2 model framework. This is more of a breaker though, I would say. Short-term high being cleared. We're then breaking structure here, leaving behind the fair value gap. You see that we do go a little bit higher up into that new day opening gap one more time. So running above this fair value gap. But we still hold this high. That's why I say I like the breaker formation a little bit better. High, low, higher, high, getting broken. Right, down close candle should resist price and send it lower as we saw. If we go to a 1 minute chart now, we'll share the initial entry that we took this morning. So for those of you that were in the stream, we saw how, right, this fair value gap here, I liked this fair value gap. We had created suspect highs just below this new day opening gap. So when we trade up into this, right, create this high, create now two relative equal highs just under this level, and we're consolidating heading into 930. This is when I really expect Judas swings to take place, right? Turtle soup entries to be kind of presenting themselves. And that's what this was here. So we're not only pairing, right, the down close candles and the fair value gap, we're also pairing all of these lows. Look at all these lows in here, right? 1, 2, 3, 4, 5, 6, 7, 8 lows resting in here that we can run as we're delivering into this fair value gap. So right at 930, we deliver into that. Entry came right on that level. Stop just underneath the swing point. At this point, right, swing points should hold us. This market structure should hold if this fair value gap is going to be respected. And we were just targeting that new day opening gap. So this was a quick scalp, in and out. But it was nice to see, and we don't like holding trades too long, so we were fine with that. We were then able to capture it, right? So we cleared these short-term highs, and we were able to capture this back down into that swing point. So we clear the short-term high. We're really looking to see if we can reject from here. We're not expecting price to blast through this. We were simply looking for price to trade up into that new day opening gap to then go lower, right? So going up just to go down. Once we see this volume imbalance here be disrespected, we immediately went short on the following candle. So once again, if we watch the live streams, once we hit this, right, we create this initially, we trade up into the new day opening gap, we break underneath it, and we immediately use that as the inversion. So stop now goes above the candle that's above the new day opening gap. And our target now just goes back to this swing point here. This becomes sell side. So we weren't holding for really long moves. We were just looking for quick, really volatility off that morning open. And we were able to capture that in both directions. So that was a beautiful way to start the day this morning. Taking it up, waiting for that confirmation, taking it back down. At this point, we just give a deeper retracement back up into that new day opening gap one more time. Still holding that level nicely. And then from there, we really break down and start to trend lower. We spoke about how this fair value gap here, if we can get back underneath it, this should offer us resistance now. So we create it initially, trade through as we tap that new day opening gap. Notice we leave a fair value gap inside of it. So when they're paired like this, if we can break back underneath, this would be a good area to look for price to find resistance. It does here. Breaks lower, creates a volume imbalance, gives that volume imbalance entry. And from there is pretty heavy into our 8:30 and midnight level, not even returning into the volume imbalance. We see that price now breaks through, right, fair value gap. So if we look to the left, discounts that we use on the way up, We'll hesitate on the way down, but eventually we do trade through that, now using that as the inversion, tapping it beautifully, and hitting the midnight level. We created this fair value gap as we broke through the midnight, and we spoke about this morning how we kind of would expect if we're going to do this, that price would want to continue lower. So our intention was to see if we want to revisit this low, and ultimately we wanted to see this low here be traded into. So we can run sell side here and here. As we were sitting here talking this morning, this was pretty brutal to sit through, right? A lot of up and down. But we held on to the idea that we still would want to see lower prices. It's just going to be a high resistance liquidity run. We had expanded already into midnight, so we would expect consolidation near that midnight level. But we were still holding on to the idea that we would see these sell side targets be taken out. As price retraces, we're just giving a deeper retracement back up into, right, an inversion, but also just this untouched inefficiency here. So just delivering and repricing into these inefficient areas in price, right, up close candle, order block. We hold the candle bodies, wicks go higher, bodies tell the story. We hold there, break lower, break underneath, now an inversion. And ultimately we were able to take out right this low. We create these lows here first, 1, 2 lows. And we spoke about how since we created liquidity here, we wouldn't actually expect to see London's low be ran on this move here. And that's why we were able to hop in the longs that we shared in our video this morning. So although we wanted to see lower prices, this type of delivery where we're making a low, right, creating another low, engineering liquidity just above our higher time frame area, kind of pointed towards the idea that after running that liquidity, we would give a reversal. You see, we do end up reversing nicely. We spoke about how we would use this fair value gap as our entry point. So on the way down, we're using the consequent encroachment. As we close underneath it, we could then use that consequent encroachment as resistance. So we got short into our higher time frame objective here, sell side. We then reverse, close back above the consequent encroachment. And just like closing below it, if we're going to close back above it, we could expect to use it as support. So as we trade out into that level, we go long there. And from there is off to the races, which was nice to see. Targeting in this inter-range liquidity buy side was our final target. Ultimately, we just return up into, right, some inefficiencies up here. If we can move these for now. We refill this inefficiency. If we go to a higher time frame, you'll see that we're returning into, right, the order block here. And also on the 2 minute, we're hitting this 2 minute fair value gap. So after holding, we start breaking down again, and we'll continue to look at that. After hitting that 2 minute fair value gap, we then start breaking structure down again. And you'll see how, right after breaking through swing lows, leaving breakaway gaps, we get heavy once again and just deliver back to this low. So the main objectives were sell side targets, right? We're giving deep retracements into inter-range liquidity buy side, but you're seeing how sell side is being interacted with more here. Right, and ultimately we do get London's low taken out. We kind of consolidate heading into the lunch hour. So after running out this sell side, delivering into London sell side prior to the lunch hour, we continue to consolidate. And notice we do get a little U2 model formed right as we head into lunch. So we clear a short-term high. Short-term high cleared. We're breaking under a low. Using that now fair value gap to send us lower. All right, so a nice YouTube model. From there we get heavy, right? Accelerate aggressively. And at this point we were just targeting, right, lower objectives. If we pull up a daily chart quickly, we can show you the daily liquidity level here that we were kind of aiming for. So we have that level here pulled up. And this will be important as we continue to analyze. Right, so you see once we broke through the sell side, we get aggressive and heavy. Here is that 1 minute YouTube model. And now the target becomes that daily low. Look at that beautiful delivery into that, right? We wick into it, bounce, return into an inefficiency quickly in the form of this fair value gap. Take out the low again. So still taking out lows. We give a false little bull setup here, right? People trying to go long too early. not understanding 1:30 is really the real-time window we look for in the afternoon. They get burnt, right, as price holds this bearish fair value gap. Right, we deliver one more time into sell-side liquidity. And at this time, notice what time we clear out this low. Right at 1:30. This is when we can really expect afternoon setups to form. And right at 1:30, we clear a short-term low. We then break structure with displacement. Remember, we're also breaking back above an old liquidity level, right? A daily level that's going to be important. And we're doing it with the fair value gap. So a very high probability setup here, right? Very easy to trust longs off of this fair value gap. Price trades into it. We hold, blast through now, creating an inversion fair value gap here. And at this point, we just now continue to deliver into swing highs left behind. So the swing highs left behind prior to lunch, these relative equal highs, you'll see that we come back up and clear those pretty nicely. Right, given good delivery, using down close candles, fair value gaps as we continue to trend higher and higher. Right, fair value gap here as well. So as we head into power hour now, and this is where we'll kind of go over the video we shared this afternoon. We deliver into the midnight open again. And now on a 2-minute chart, I'm looking at this. Right, I'm seeing as how we blast up and through the midnight, creating a bullish fair value gap. So when I see something like this, I would expect this to hold. Delete this for now. If we're bullish and price wants to continue to run into buy side or potentially up here, this would need to hold us. So as we're heading into power hour, I see price trade right through that, completely negating it, not hesitating one bit. That right there is intentional. That indicates to me price does not want to head higher and instead wants to run out all of these lows created prior to power hour. As we mentioned, our entry came right at the 2-minute fair value gap. So it was a beautiful entry, no ticks of drawdown. Right, we got in right at this candle's high. Stopped simply above that midnight level. And as you notice, right, our target ended up being this original fair value gap. So if we go back down to the 1 minute, let's not get lost here. Clear up, this is the 2-minute. Once we get in here, let's stop above that midnight. Our targets became this swing low, just because it's right below equilibrium, right? If I was to take the range from low to high, run a midpoint. Equilibrium's here. If we're going to run through equilibrium, find that first swing low underneath. So that was our first partial level. But ultimately, our final target was this original fair value gap here, which is also, right, what else is it? It's the daily liquidity level. So now if we drag out our actual swing low, look where all these areas are lining up. This is why I was so confident that price would continue to deliver into this area, right? It was going to be an important key level in price. We see now how we spoke about. We wouldn't expect this low to be taken out, and that was why. We had external range liquidity here, but this liquidity here, the daily, was more important, and especially because we had this untouched fair value gap, we would expect price to just run this low out and potentially return into the range. You see now where we're at. We've actually gapped up. So we're going to draw this out right now. Because just like yesterday, this will be important tomorrow. So yeah, that was kind of our day in a nutshell there. Able to take advantage of longs early in the morning and then hop on shorts and ride those shorts into just short-term lows. Right, ultimately, we deliver into our objective, kind of our overall bias we had, which was rejecting off that new day opening gap and running out, right, lows. We ran out this low here, and we were able to run out those daily lows as well, which was nice. We were also able to take advantage of power hour and capture that nice sell-off into those daily lows once again, right, clearing this liquidity as well. So multiple forms of sell side being taken out. Like that. I'm very comfortable and familiar with how power hour delivers, which is why I'm okay holding trades a lot longer. You'll often see in the morning I tend to just aim for 5 handles, but if we get a power hour setup, those often play out pretty nicely, and I could see those panning out well, and we were able to take advantage of it today. That trade there was able to also right, just pay, or I guess not pay necessarily, but pass a few funded accounts for us. So we were able to take advantage of our first entry here. We added that stacked position at that fair value gap. Let's zoom in a little bit. So as we create a new premium, right, you see how we're just respecting premiums on the way down. So when I see price deliver like this, I trust that we'll continue to deliver lower. So we go ahead and add in there, partial out at this low, like we mentioned, and ultimately deliver into our final target like you saw. So all in all, a good day. Heading forward, we will continue to see if this new day opening gap wants to play a role. Because we did clear these daily lows now, right? I would be interested to see if we don't want to give some type of just retracement into, right, buy side here and potentially that new day opening gap. So like we spoke about in yesterday's recap, if we get back into this new day opening gap, create some type of bullish structure, right, we would look for that to then offer us prices higher, and we would be able to capitalize on this. Really the same way that we spoke about yesterday as well. If we were to break underneath that, then I still think we can continue to attack lows. So we don't necessarily want to try to be calling the low. We'll look for a short-term retracement, but if price shows that it wants to continue to run out lows, we'll hop on board with that. But until tomorrow morning, take care everybody, and we will talk later.